All right. Good afternoon, everyone, and welcome to today's webinar. Now, I'm Cheska Cordero. You guys all know that. I'm from Insightful Accountant and your host for today. Now, before we start, you guys know the drill. I like to go ahead and ask a question of the day, just as everyone's coming in and settling down in front of their computers, phones, or tablets, whatever you may have in front of you. I want to ask Christine, because I know I asked her what her favorite Christmas movie was already. So I want to ask you, since it's really, really close now at this point, what are the top three kinds of gifts that you would love to get this Christmas?
Love to get.
Yeah.
Okay, so this is like a personal confession of mine.
Yeah.
I'm not I'm not an ideal gift receiver
Mm-hmm.
because I get so much joy out of gift giving that I'm really
Same.
terrible about coming up with ideas of things for myself. My husband's sitting right behind me. You guys can't see him off screen, but he's probably rolling
He's
his
listening.
eye.
He's listening.
Yeah, yeah. So I really like jewelry and no, I'm kidding. I really like things that like I didn't think of. You know, like when somebody comes up with a really creative idea, like they just
Yeah.
saw something and thought of you, and it's not something that you would have thought of
Mm-hmm.
for yourself. Those are
Yeah.
my favorite because I think they just make the best surprises.
Yeah. Honestly, I'm the same. Like the love language is just giving gifts.
Yes, yes, I am a
Yeah.
hundred
I
percent
love
a
doing
gift
those.
giver. Yes.
Same. So I like thinking about the person, like what exactly they like. I'll
Hmm.
maybe give like my nephews the exact same gift, but it's kind of different just to
Yes,
fit their own personality. Fantastic. I love
yes.
doing that. But for myself, I cannot come up with any and ask
No.
someone like, can you get me this for Christmas? I can't do
So
that.
really the best gift for me is for you to just enjoy the gift that I've given you. Like
Yeah,
even
just
if
to
you
see
don't
you
like
really
it, like
appreciate it
fake it for my
for me.
happiness. Yes, that's what
That's
I
so
need.
true. I love that. Okay. Anyway, again, guys, good afternoon and welcome to December's session of TPN Tax Talks. Again, I'm Cheska Cordero from Insightful Accountant and your host for today. In this TPN Tax Talks, I cannot talk, speaking of, we'll be going over key tax law changes. Now, what's new for tax season? There's always a plethora of law changes, but in this season, we will focus on the key changes that will impact the most taxpayers this filing season. You guys will walk away with a quick list of tax law changes you guys need to know, as well as tips to start addressing them with clients early, all thanks to the lovely Christine Gervais. Now, I'll have her introduce herself in just a little bit after I cover a few of the housekeeping items. Now, there is no CPE for this as it is just a 30-minute webinar. Now, if you have any questions, you guys know the drill. Please enter them into our Q&A panel. And I want you guys to be specific. You can't just ask, what did you mean? You got to ask, hey, Christine, what did you mean by you only wanted this kind of gift? Or what did you mean by fake your happiness for me? Mainly because you might not get to your question right after you put it in there. So it's kind of just there to give her context as to what your question really is. Now, we will be sending a link to the recording after the webinar, and it's also going to be up on our YouTube channel within about 24 hours. So if you want to go check that out over there with many other webinars, along with the past sessions of TPN Tax Talks that might be of interest to you, I'll be putting that link in for our YouTube channel right into our chat, as well as the copy of the slide deck. So you guys watch out for that. And I will be rolling out those links and the copy of the slide deck throughout the webinar in case you might have missed it. And lastly, do not forget that Insightful Accountants 2024 Pro Advisor Awards applications and nominations are still ongoing. And all it takes for you is to participate to become an Insightful Accountant 2024 Pro Advisor Awards. Try saying that 5 times quickly. Now, well, there's actually two ways to participate. It's being nominated by someone else or nominating yourself. So I'll be putting that link into our chat as well for you guys to check out. And that's it for me, Christine. Welcome and thanks for being here.
Thank you. Awesome. Well, we will go right ahead and get started. The hardest part of the day is always me getting the screen share and the slide deck going. So go right ahead and get going. There we go. I will keep the Q&A box open, and I'm just going to pull the chat open as well so that I have these both up on the side. So again, like Cheska said, if you have any questions, please feel free to pop them into the Q&A throughout the session, and I will do my absolute best to make sure that I get all of those answered for you. Thank you guys all so much for being here. I appreciate it. If this is your first tax talk that you're attending and you're liking what you're seeing and hearing, you want to make sure you don't miss out on anything in the future, go ahead and scan the QR code, and that will get you subscribed to Tax Practice News so that you get all of the notifications of the events that we're having ongoing. And I did just see that Cheska popped the slide deck into the chat. So if you want to grab those now, you can. For those of you who this is your first tax talk, thank you for being here. And all of my returning guests, thank you. If we haven't met, my name is Christine Gervais. I've been a licensed CPA for almost 15 years. I run my own practice, and I have since about 2016. So we're a small practice. We mostly work with other small business owners, and that's the majority of the perspective that I take when I put together these trainings is really for those of you who are running other small tax advisory bookkeeping practices and trying to focus on the tax law changes today that are going to impact the majority of your clients. So let's just get right into it because this is a short session. What is coming in 2023? So interestingly enough, we very strategically put this topic at the end of the year because traditionally speaking, we've got lots of tax law changes that we want to talk about in December leading up to tax season and how to get ready for those. We actually have, I'm like knocking on wood, but we have very few major changes coming for this filing season, for the 2023 filing season, that are going to be impacting the majority of your individual and small business clients. So, not a ton of really big things to talk about today, but we do have some smaller things that I will just make sure that you're aware of that will help you and your team. But then we're also going to talk about the Secure 2.0 Act. This was the act that was just recently passed by Congress as part of the budgeting procedures that were finalized just last month. Most of those changes are actually not going to come into effect until 2024 or later. But we'll talk about some of those key points because a lot of them are very individual specific, and we want to make sure that we're taking those things into consideration even with this upcoming filing season, because if you have clients that are asking you tax planning and strategy questions, or you're providing advisory services to any of your clients as part of your tax preparation process, you're going to want to be aware of some of these things that are going to potentially impact next year's tax return while you're having these conversations with them. We'll talk about some of the credits for energy efficient property, electric vehicles, things like that that are still available for 2023 returns. And then just be aware that there are inflation adjustments to all of our standard deductions and standard credits for 2023. So all the standard deductions have gone up a little bit from last year. Some of those credit dollar amounts have changed for things like the child tax credit, et cetera. So we're expecting obviously all your tax software to be updated for those dollar amounts, but just again, in your planning process and looking at some of these numbers, do expect that those amounts are going to be different than they were on 2022 tax returns. So let's talk about this Secure 2.0 Act. And again, like I said, a lot of this is actually going to be specific to 2024. So most of this is not going to be available to your clients on their 2023 tax returns, but we're only a couple weeks away from 2024 starting. And the way that our practice is built is we do offer quarterly tax planning services to many of our clients. And so that first quarter worth of tax planning and tax strategy for 2024, it's layered right on top of the amount of time that we're spending on actually preparing their 2023 returns. So these conversations, at least for us, are going to start happening with our clients right in that first quarter of the year. And you want to definitely be aware of these changes. So, this is just kind of some of the key highlights that I pulled out of this act that I think are more specifically beneficial to individuals that you want to have in the back of your mind because you very well may have small business clients as well as some individual clients that are interested in knowing that these are available to them. So the RMD age, required minimum distribution age, is getting bumped to 73 next year. We're going to see that continue to trend upwards as part of this act. So I believe starting in 2025, that's going to go as high as 75. So those age requirements for when some of your older individual clients are going to have to start taking their RMDs, that is going to be changing. So if you have clients that are falling like kind of right on that line, this may be something that you want to look at with them next year about whether or not they actually have to take their RMDs or if they have some flexibility with these changes and rules. There's a lot more lenience for RMDs that you have to take from an inherited IRA. So again, just something to be aware of. That is starting in 2024 as well. But if you have any clients who are inheriting their IRAs and those IRAs are already coming to them with RMDs active and in place, they might have some more flexibility in terms of how much time they have to start taking those RMDs, which could give you a lot more breathing room in terms of tax planning and strategy for those clients because they're not going to be on as tight of a time schedule for how quickly they have to start taking that money. An elimination of RMDs from qualified employer Roth plans starting in 2024. So this includes Roth 401ks. So the point of that one was to try to make it a little bit more consistent between IRAs and 401ks, specifically where you have employer contributions to these Roth plans. So again, this is just very high level for you to be aware of. But if you have clients, even small business clients who are offering some type of a employer sponsored Roth plan to their individual employees, these are all things to just kind of keep in the back of your mind that these changes are coming. This one is really interesting. $1,000 emergency distribution from retirement accounts will start being allowed in 2024. So clients who have some type of a financial emergency that they need to address can take up to $1,000 completely tax-free, penalized-free from their retirement accounts starting next year. So that's something to completely brand new we haven't seen before to keep in mind. Employer incentives to participate in 401ks. They haven't put a specific dollar amount on this yet. It would be nice to see them provide a little bit more guidance on this. But essentially, this says that you will be able to offer small financial incentives to your employees to participate in 401ks. And they said small, and none of us know what small means yet. So, again, something to be aware of, but we're probably going to need some more guidance on that. Cheryl, will the RMD age factors to calculate the RMD amounts change when they raise the RMD age? So are you asking, tell me, Cheryl, are you asking specifically like, will the software adjust its factors to calculate those amounts? If that's what you're asking, let me know. I would assume so, but yes, I would also expect that like if you're using tax planning software or if the financial advisors in any of these cases are using software to calculate with those factors involved, I would expect that those changes are going to need to be incorporated into those. Um, oh, yes, I expect, yes, that the government is going to change the RMD factor table. Yep, I would expect that that change is coming. I would assume that it's probably not ready yet. We all know how quickly they move on some of these changes. But yes, they're going to have to update that table because that 2024 age change is not the only one. It's there. You've got another change coming the year after, so you've got a lot of difference that's going to take place in the future. Bigger catch-up contributions to retirement plans are going to be allowed. So keeping in mind that those catch-up contributions, again, for older clients are going to change starting next year. They have more opportunity to catch up. Employer student loan funds matching. This one is super interesting and maybe something that you want to make both your individual and your small business clients aware of. I think that this is going to be a really interesting small business tax planning strategy if they have the right type of staff for it. But essentially, what this says is that employers will be allowed to make a match to their employees' 401k plan up to and equal to the amount of that employee's student loan payment on a monthly basis. So you may be aware that a lot of the student loan payments were deferred during the COVID years, and they've continued to be deferred. Those student loan payments are supposed to be starting to kick back in here shortly. And a lot of people that haven't had to make those student loan payments for a number of years now are now having to make those payments again. Many of them have accrued interest that they haven't paid over the last couple of years. So those loan amounts might be higher than they were anticipating them to be. So this is a really interesting strategy. The reason that they did this is because they said that a lot of people don't save for retirement due to financial restrictions from having large student loan payments. So, again, this money can't go directly to the employee to pay the student loans, but it allows the employer to contribute to the 401k on the employee's behalf in up into that amount of the student loan payment. So that could be beyond what a typical match might look like. And again, I'm hoping that we're going to get some more very clear and specific guidance on this as this begins to roll out, but might be a very interesting tax planning strategy, like I said, for the small business owners as well as the individuals who might potentially be impacted by that. And now there's potential as well for 529 Roth rollovers. So, from a tax planning and strategy perspective, one of the biggest reasons that 529 plans may have historically not been attractive to clients is that if you contribute to a 529 plan and in the future those funds are not used for qualified education expenses, let's say your kids don't need to use all the funds, let's say they decide not to go to college, things like that. Um, those funds are kind of stuck there and they can only come out tax free for qualified education expenses, which has been one of the downsides to a 529. So now this act is essentially putting into place some parameters where clients may be able to roll 529 plans over into Roth accounts. So that could be potentially very attractive for some of your individual clients who are in that position of wanting to get some funds out of a 529 plan. There is some fairly specific guidance on that and limits as to who and who is not eligible. So if that is something that you think might impact some of your clients, definitely go and look at the specific guidance on that. And of course, you can find a lot of this already on the IRS website, what this act means and what some of these provisions are. So, mostly again related to 2024, but certainly going to immediately start impacting your tax planning and strategy questions in sessions that you're having with your clients. The things that you actually want to keep in mind for really immediately within the next month or so as we kind of ramp up and move into the 2023 filing season. Again, for the second year in a row, we see this 1099K changes deferred. So the IRS has been very clear about the fact that there will not be another deferral of these changes. So for the last 2 years in December, they have delayed the start of these changes to the 1099K reporting provisions. As those provisions stand right now, your clients have to receive a 1099K from any payment processor who paid them either, excuse me, more than 20,000 in transactions or more than 200 transactions total for the year. Now, originally the IRS had wanted to change that to be anyone that received more than $600, which was causing quite a lot of issues because in situations where, let's just say I split an apartment with two of my friends and they're Venmoing me their third of the rent every single month and I'm the one being responsible for paying the landlord. That's not taxable income to me, but certainly was going to result in me receiving more than $600 a year in funds via a payment processor. And in that scenario, Venmo would have been responsible for sending me a 1099K. So now you, as the tax preparer, receive my tax documents, and I have this 1099K that I need to report on my individual return, but it's not taxable income. So practitioners have been asking for the last couple of years for some guidance on how we handle these situations for our clients who are getting these forms where it really was reimbursement of funds, what have you, but not taxable income. And the IRS provided us with some sort of weak guidance this year where they said, well, just treat it as other income and then have an offsetting other like negative income and just kind of like some stuff that didn't really give us a lot of very clear direction as to how we should and shouldn't report this. So they said, all right, we're going to defer it one more year, but starting in 2024, this is going to happen. However, they're going to bring this down to 1099Ks being reported to anyone who receives $5,000 or more in payments via a payment processor next year. So that's the place that it's going to start in 2024. Not quite as aggressive as the 600, but something again to keep in mind that you are most likely going to have quite a few more clients who are receiving these forms for next year that did not expect to receive them, and just be aware that you're probably going to have some conversations around the nature of that income. Electric vehicle credits still available for 2023 returns up to $7,500. So if you had clients that did purchase electric vehicles this year, they may still be eligible for that credit on their 2023 tax return. The WISP requirements are for us to know as the practice owners. So all accounting firms were required to have a written information security plan in place by the end of 2023. So if you haven't done this yet, this is your friendly reminder that you have a couple more weeks to get this in place. If you go out on our YouTube channel, which I know Cheska was going to post the link in the chat, and also there's a link on the slide deck a little bit later on, but we did do a webinar on this. One of our tax talks earlier in the year was on WISP requirements, and there's lots of free templates out there for you now. But definitely make sure that you set aside some time in the next couple of weeks to make sure that that is in place for your practice. So even small practitioners are required to have these in place by December 31st. And then if you've been following along with our newsletter, you've probably seen some of the articles that we've been posting around the beneficial owner information reporting. So this is not related to your client's income tax returns, but suffice it to say, very important for you to know about. You are going to be the advisor that has all of the information that these clients are going to need in order to do these reports. So just be aware that your clients are going to be required to file this beneficial owner information for their small business. Originally was due within 30 days, so kind of around the end of January. That deadline has extended, and businesses now have 90 days to be compliant with filing these. Accounting firms are specifically excluded. So your practice is most likely not going to have to file one of these for yourself, but most of your small business clients will have to file this information to report beneficial owners, specifically to FinCEN. This is part of their anti-money laundering maneuvering that we've seen that kind of chip away for the last couple of years as these rules have continued to change and require more and more reporting and compliance. So I put the link to the FinCEN website right in there. That has a ton of information, including a checklist of going through to determine whether or not you are required to file. And so that is a checklist that you could certainly direct your clients to as well. Um, Cheryl, you have to file for yourself if you are an LLC and if you formed any client companies. So, yeah, there's a lot of very specific reporting in there. When I say that accounting firms themselves are excluded, of course, that depends on, the type of legal entity structure and things like that you have. So, it's great to go through this, be aware of it. And like I said, most of us are going to be getting questions from our clients about this, or very also likely your clients aren't even aware that they're required to be doing this. The penalties on it for not doing it are significant. So I think there's a lot of value add to at least be telling your clients that this requirement exists so that you're at least helping to make them aware. And then home improvement credits. So we just did a tax talk on this a couple months ago. If you missed it, I did put the YouTube link that goes directly to this specific video up on our YouTube site. You can go back and watch it, and there's a lot more detail in there in terms of what home improvement energy credits are and aren't available. There are some small business credits that are also available for property improvement, but a very high level, 30% of qualified energy efficient improvements in homes, up to 1,200 for energy property costs, up to 2,000 for any clients who put in heat pumps, biomass stoves, and boilers. So this is exciting for your individual clients for sure that these credits are still available to them. This is on existing property, can't be a completely brand new build. So if they built a brand new home in 2023, most likely not going to qualify. But this is something I think, again, from a value add perspective, really easy questions to just add to your tax organizers and ask your clients whether or not they did any of this, because it could be a way to save them some more money on their tax returns for sure. So you can grab that link right there. Actually, yeah, I can't copy and paste it right now, but that YouTube link will be right in the slides for you to go and click and watch that if you want a little bit more information on the energy improvement credits that are available for 2023 for your individual clients. So next steps in terms of preparing yourself for some of these key changes that are coming, getting them up and available to your clients and getting organized for tax season. My personal experience after a number of years of going through tax seasons is that the more that we can do to try to collect the information that we need from our clients up front and the first time through, the more efficient our tax preparation process is going to be. You all have been in a situation where you have the tax return nearly completed and ready to draft, or even better, you've sent a draft to your clients and they come back and they go, oh, yeah, I had this thing that I forgot to send you. And now you're forced to put that return all the way back through compliance procedures. So the more you can kind of ask them up front and kind of direct them to some of the things that you need from them, the more efficient your process will be as well. So, highly recommend that you keep a list of changes handy for you and your team members so that everybody is just aware and cognizant of what are some of the new things for 2023, what are some of the questions that we should be asking. Same thing, I think it's really helpful to build some 2024 changes into your estimates and your tax planning strategies. So if you or anyone in your practice is having those tax planning conversations with clients earlier on in the year, you definitely want to be aware of what they're going to be able to potentially take advantage of in 2024 that might not be a part of their 2023 tax return. And I think that it's really easy to kind of miss some of those changes in our planning if we don't have a nice, clear, bullet pointed list of things that we need to consider. Consider a financial advisor relationship. The reason that I mention this is because a lot of those 2024 changes, as you guys can see, were related to retirement plans. Changes to retirement plans, both from the employer and the employee perspective, a lot of different and new great beneficial rules and things that people can take advantage of. And in my experience, I'm happy to be the tax advisor and talk to people about how that, different strategies and different decisions that they make will specifically impact and hopefully benefit their tax relationship. But I don't like to have to also be the one that is highly knowledgeable on every rule related to 401ks, IRAs, etc. So I think that's a great opportunity for you to find a really nice symbiotic relationship with maybe one or two different financial advisors in your network that specialize in those things. What type of plans are the best ones for your small business clients? What types of things can they do and not do? And that those types of things, I think you can save a lot of time by talking to your clients and saying, hey, this might be something that you can take advantage of, and here's a couple of referrals of someone that you can talk to that can give you the really specific details about what you can and can't do with your retirement planning. And then adding items to your checklist and organizers. So if you have your own tax organizer or your own checklist that you're sending to your clients, add these questions to them so that you're prompting the client, like I said, to try to send you as much information up front instead of them going, oh, we forgot about this or we didn't know about that, and having to send it after you've already organized your tax return and sent a draft. So the more that you can ask about upfront, certainly the more efficient your process will be as well. So a couple of questions. Is the IRS WISP on YouTube channel 10 months older? Is there a more recent one? No, so it probably is that old. We definitely did it at the beginning of the year. If you take a look at that one though, the template that we talked about, the template that we kind of based that off of, that was the Tech for Accountants free template that is available. There hasn't been any changes made to it. So that template is the same as the one that we talked about when we did that original webinar. And then Mari, could you please send your copy of your must have in your organizer, please. I don't necessarily have a specific checklist of things that must be in your organizer. I will tell you that I typically base it off of what is in the tax return itself. So we really rely on the questions that are in the tax return. So our must haves are some of those more legally required questions like, did you have cryptocurrency? Did you have any of those things? But I will include things like this as well. Like, did you have any energy efficient home improvement credits for the year, to make sure, like I said, that you're asking those questions up front and collecting that information up front so that you don't get all the way through preparing a return and then find out at the last minute that you have to add something or make changes. So we are right at 12:30, but of course I will hang tight for a couple more seconds and just ask if there's any more questions that I can answer for you. My contact information is right here as well. You can also feel free to scan the QR code if you want to contact me with any follow-up questions. Please feel free. And anything that comes up that you think of that I didn't answer, please feel free to reach out and let me know. Awesome. I don't see any more questions, so hopefully that was everybody's answers.
Yeah, we don't have
Awesome.
anything in the Q&A anymore. So if you guys are good, any last minute ones? Are you still typing? All right. All right, guys. Well, actually, that's it. It's already 1:30. Oops, not 1:31. It's already 31. I ain't in the number, 12:31. All right. Well, thanks again, everybody. I think we have a, sorry. Oh, someone said great
Yep,
presentation.
we're good. We're good.
All
Thank you
right.
so much. Appreciate it.
Fantastic. Thanks, everyone. We hope to see you next year, and let's cross our fingers. That's the only thing we have for tax season.
Yes.
All right.
Bye
Bye,
now.
everyone.